This week in economics on the 27th of February 2016, the last show of this short month. It's a leap year, which means there's one additional day to it. But nonetheless, we have some pretty good statistical information here. The gross national product revised, we'll get that in. We'll also get in the consumer side of the issue, and we'll look at the annual letter from the Berkshire Hathaway organization via Warren Buffett and his various pronouncements on the productivity of his various enterprises. They all made money. And on the political scene, he endorsed Hillary Clinton of New York. And his other enterprises, the Clayton Homes comes to mind. They make mobile homes for people that can't afford regular homes. And they have been the subject of much criticism. On our Bostonred unit, we did a program on Clayton Homes. And billionaire Buffett has attempted to answer the critics, but he has not stymied anyone. The facts are there. But let us first turn to let me get to the screen here. National income and product accounts. This is the gross domestic product of Q4 and the annual 2015. This is the second edition. This is from the Bureau of Economic Analysis. On the 26th of February, gross domestic product, the value of goods and services produced by the nation's economy, less the value of goods and services used up in production, adjusted for price changes, increased at an annual rate of 1% in Q4. That's the last quarter of 2015, according to the second estimate released. In the third quarter, real GDP increased 2%. Mr. Buffett will talk about that, and we read his report there. And he counters Trump with the living standards of John D. Rockefeller. Anyway, the increase in real GNP in the fourth quarter reflects contributions from personal income consumption. We'll get to that. Some more recent figures out there. PEC, residential fixed investment, and federal government spending that were partially offset by negative contributions from exports, non-residential fixed investment, state and local spending, private inventory investment. Imports were subtracted in the calculation of GDP decreased. Declaration of real GNP in the fourth quarter primarily reflects the declaration in PCE, that is personal consumption expenditure, and downturns in residential fixed investment in state and local government spending. Real gross domestic product purchased by U.S. citizens, etc., increased 1.2% in Q4, compared with an increase of 2.2% in the third quarter. The price index from gross domestic purchases, which measures prices paid by U.S. residents, was 0.4% in Q4, compared with 1.3% in Q3. That's excluding food and energy. The price index of gross domestic product increased to 1%, compared with an increase of 1.3%. Current dollar GDP, the market value of goods and services produced by the nation less the value of goods and services used up by production, increased to 2%, or $88.2 billion in Q4, to a level of $18,148.4 billion. In the third quarter, current dollar GNP increased 3.3%, or $146.5 billion. A few little revisions here. Current dollar GNP 0.7% in the advance estimate. The second estimate at 1%. Current dollar GMP at 1.5%. That's in the advance estimate. In the second estimate, 2% there. And gross domestic purchase index 0.2% in the advance, and the second estimate at 0.4. 2015 GDP increased 2.4%. This is from the 2014 annual rate to 2015. The increase in real GMP in 2015 reflects positive contributions from personal consumption expenditure, that's the PCE, non-residential fixed, residential fixed investments, private inventory investments, state, local government spending, exports, imports are part of the subtraction in the calculation. Comparing real GMP growth in 2015 with 14, real GMP increased 2.4% both years. Thus, there were offsetting moments in the component decorations in non-residential fixed investments and in exports, and acceleration in imports were offset by acceleration in PCE and private inventory investment in state and local government spending. The price index for gross domestic purchases increased 0.4% in 2015, compared with 1.5% in 2014. Current dollar GMP increased 3.4%, or $594.8 billion in 2015, to a level of $17,942.9 billion, compared with an increase of 4.1, or $684 billion in 2014. In 2015, that is measured from the fourth quarter of 2014 to the fourth quarter, in other words, to Q4 of 2015, GDP increased 1.9, compared with an increase of 2.5 in 2014. The price index for gross domestic purchases increased 0.4% during 2015, compared with 1.2% in 14. A year in transition is the way we see 2015, not as good as 2014, and we're in a pattern, I guess you'd call it, of 2 to 2.5 GDP. Basically, is what you will be seeing in 2016. Perhaps if there is, it is an election year, we could see 2.5 to 3%, which would be surprising. But you have a lot of consolidation out there, so we'll have to wait and see on that one. To the latest, this is released on the 26th of February 2016. Personal income and outlays in January 2016. The first information we've gotten in for this year. Personal income increased 79.6 billion, or 0.5%. Disposable personal income increased 63.5 billion, or 0.5% in January. Personal consumption expenditures increased 63 billion, or 0.5. In December, personal income increased 45.6 billion, or 0.3%. DPI increased 39.2 billion, or 0.3%. PCE increased 11.6 billion, or 0.1%, based on a revised estimate there. The real DFI increased 0.4% in January, the same increase as in December. Real PCE, personal expenditure, increased 0.4%, compared with 0.2% in December. So as personal income increased there, and personal consumption expenditure, as PCE, also there. Nonetheless, we'll lay this down here. In 2015 in September, if we look at the long layout here, it was 1/10%, and in January it was 0.5% there. Let me get down here a bit. Compensation, which is salaries, a lot of talk about income inequality. 48.1 billion in January, compared with an increase of 18.3 billion in December. Private wage and salary increased at 43.7 billion, compared with an increase of 15.9 billion. Government wages and salaries increased 4.4 billion, compared with an increase of 2.2 billion. So things were looking up. Raises for government workers. Supplements to which salary increased to 6.5 billion in January, compared with an increase of 5 billion in December. In personal income, proprietors' income increased 7.7 billion in January, compared with an increase of 11.5 billion in December. Farm proprietors' income increased 3.1 billion. Contrast to a decrease of 4.8 billion. Non-farm proprietors' income increased 4.6 billion, compared with an increase of 16.3 billion. Retail income persons increased 5 billion in January, compared with 3.8 billion in December. Personal income receipts on assets as personal interest income plus personal dividend income increased. Something we look at here, and Mr. Buffett will speak to that in his report. 11.6 billion in contrast to 8.5 billion. Personal current transaction receipts increased 10.6 billion in January, compared with 17.5 billion in December. Contributions from government social insurance subtraction in the calculation of personal income increased 10 billion in January, compared with 2 billion in December. Personal current income, current taxes, and disposable personal income. Personal taxes increased 16.1 billion in January, compared with 6.3 billion in December. Disposable personal income, that's the DFI. Personal income less personal current taxes increased 63.5 billion, or 0.5%, compared with an increase of 39.2 billion, or 0.3%. Personal outlays and personal savings, that is PCE, personal interest payments, personal current transfer payments increased 67.5 billion in January, compared with an increase of 14.3 billion in December. PCE increased 63 billion, compared with an increase of 11 billion. Personal savings, PFI less personal outlays was 705.1 billion in January, compared with 709.2 billion in December. Personal savings rate, personal savings as a percentage of disposable personal income was 5.2%, the same rate in December. Real DPI, real PCE, and price index. Real PCI, adjusted to remove price changes, increased 0.4% in January, compared with 2% in December. Purchase of durable goods 1.1% in contrast to 0.4% in December. Purchase of non-durable goods 0.4% in contrast to 1.10%. But January was better. Purchase of of services increased 0.3%, the same as in December. The price index for PCE increased 1.10% in January and 1.10% in December. That excluded food and energy, increased 0.3% compared with 0.1% in December. The January PCE price index increased 1.3% in January a year ago. The PCE price index, excluding food and energy, increased 1.7% from January a year ago. Personal income outlays increased 4.4% in 2015. The same increases in 2014. DPI increased 3.7% in 2015 compared with 4.2% in 2014. PCE increased 3.4% compared with 4.2%. That would be in 2014. Real DPI increased 3.4% in 2015 compared with 2.7% in 2014. Real PCE increased 3.1% compared with 3.2% there. And some revisions here have been revised. Estimates have been revised from July through December, changes in personal income in current dollars. And we're looking here now at $2,009 DPI in current dollars chained to 2009. So we look at some of these revisions in November previous. There was 40 billion, 4.3, and 4.2 was the revised. You kind of see where this is going. Disposable income 33.4, revised to 30.6. This is in 2009 dollars. Personal consumption expenditures, current dollars at 59.4. That was November, the previous billion there, revised to 48.5 there. So a little different situation there. And if we go to December, we'll have personal income, current dollars at 42.5. That was revised to 45.6. Disposable personal income at 37.8. That was December previous there, and 39.2 in the revised. So, and let's see, I think we finished a report up here, but you can kind of see from the tables, and we'll put this on so you can, in case we miss something, and that's quite possible. Let's turn to Buffett and his report, and we'll put it on. We won't go over the whole obvious report there. Berkshire gained in the net worth in 2015 was $15.4 billion, which is an increase per share book value of both Class A, Class B by 6.4%, respectable there. Over the last 51 years, that is since the present management took over, share book value has grown from $19 to $155,501 rate of compounded annually at 19.2%. During the first half of those years, Berkshire's net rate was roughly equal to the number that really counts, the intrinsic value of the business. Similarly, two figures existed then between most of our resources were deployed in marketable securities that were regulated, revalued to their quoted price. In the early 1900s, however, our focus has changed to outright ownership of businesses, a shift that diminished the relevance of business sheet figures. A disconnect occurred because the accounting rules that applied to control companies are materially different from those used in valuing market securities. The carrying of value of losers we own is written down, but the winners are never revalued upward. Some accounting tricks here, obviously, and we'll just move on here. the year at Berkshire. Charlie Munger, that's his 92-year-old partner. He's the vice chair. Expects Berkshire's normalized income to increase every year. Actual year-to-year earnings, of course, will sometimes decline because of weakness in the U.S. economy, or possibly because of insurance merger catastrophes. The most important development at Berkshire in 2015 was not financial, though it led to better earnings. At the performance in 2014, that is BNSC, that is the Burlington Northern Santa Fe, dramatically improved its service to customers last year. To attain that result, we invested $5.8 million during the year in capital expenditure, a sum far and away from the record for any American railroad, and nearly 3 times our annual depreciation charge. It was money well spent. BNSF moved about 17% of America's intercity freight measured by revenue tons a mile, and probably moving less now because of slowdowns in the Balkans. Whether transport by rail, truck, air, water, or pipeline, in respect, we have strong numbers, one among several large American railroads, which are two of which are Canadian-based, carrying 45% more tonnage miles of freight than the closest competitor. For most American rails, 2015 was a disappointing year. Aggregate ton fell, earnings weakened as BCF, however, maintained volume. Pre-tax income rose at $6.8 billion, a gain of $606 million from 2014. Matt Ross and Carl Ice, the managers there, have my thanks. Always a little personal thing there. BCF is the largest of our Powerhouse 5 group. That includes Berkshire Hathaway Energy, Marmot, ICE. Combined, these companies are 5 of the most profitable non-insurance businesses, earned $13.1 billion in 2015, an increase of $650 million there. We won't get into Berkshire Energy here. And the Heinz, we'll kind of skip over some of this because of time. The time set situation here and move along here. Now, this is the insurance business here. General Re, BH Reinsurance, and the underwriting of profits there, $422 million there. General Re, $132 million. Geico, you've heard of that one. 460 and Upper Prime 824. So a total there, it's in millions. 1,837,000,000. And you look at this is 15, and the BHS reinsurance, BH reinsurance was 606 in 214. General Re was 277. Geico was 1,159,000,000. You can see it was not as rosy for the insurance game. And we'll skip down here. This is some of Berkshire Hathaway Energy. They own 89.9% of it. UK Utilities, I won't go into what they were able to make. It was down a bit. Iowa Utilities, 314. Nevada Utilities, 586. In 2015, they were up. It was 549 in 2014. Pacific Corp, that was primarily Oregon and Utah, 1,026,000,000. Gas pipelines, Northern Natural, Kerr River, 401 million there. A Canadian transmission utility at 177 million. It was only 16 million according to this. Renewable projects at 175. They lost some money. They were 194. Home services 191. They were in 215. They were 139 in 214. Operating in insurance, interest, and taxes 3,340,000,000. Interest 499. Income taxes 481. So the net earnings there were 2,370,000,000 for those enterprises. We won't go into the rail enterprises there. Manufacturing, service, and retailing operation. What was that? Well, $107,825. That was the revenues there. It was in millions, obviously. Operating expenses 100,000,80607. Interest expense, well, anyway. Pre-tax earnings 7,115,000,000. Won't go into all these boring figures. We'll just attach it, as they say. Now we get to this quagmire operation of here. Cord furniture. These are some of the and financial products. XTR semi-trailers. Marmon primarily tank cars, but also freight cars. Anyway, whatever. These companies, industrial leaders, have substantially increased their earnings. Ken Clayton has delivered on industry performances as Clayton Homes, the subprime operation, the second largest home builder in America. These are mobile homes. They sold 34,397 homes, about 45% of the manufactured trailer home business, and bought by Americans. In contrast, the company was number 3 in the field with 14% share when Burford purchased them in 2003. Manufactured home allowed America's dream of home ownership, well, achieved by low-income citizens. 70% of new homes are costing $150,000 or less from our industry. 46% of Clayton homes sold through, and this is the trick here, and this is not very economic term, 331 stores we ourselves own and operate. In other words, storefronts. Most of Clayton's remaining sales are made to independent retailers, they call them. In other words, yards that sell these. That's 1,395. The key to Clayton's operation is $12.8 billion mortgage portfolio. I'm proud of Mr. Buffett for admitting that. We originate about 35% of all mortgages on manufactured homes. 37% of our mortgage portfolio emanates from our retail operation, with the balance originated by independent retail, some of which sell our homes while others market only the homes of their competitors. Lenders other than Clayton have come and gone, with Berkshire Hathaway backing. However, Clayton steadfastly finances home buyers through the panic of 2008, 2009. Clayton used precision capital to finance dealers who did not sell our homes. The fund was supplied to Goldman Sachs and GE Electric products there. All of these monopolies are in that particular game. Our retail outlets employing simple language and large type, I bet they do. Mortgage-originated practices are of the great importance to both the borrower and society. We agree there. There's no question that reckless practices in home lending played a big role in the Depression. My words, not his. And at Clayton, our risk retention was and is 100%. We originate mortgages. We keep leaving aside the few that qualify for government, and very few, incidentally, qualify in this arena. The average loan we made in 2015 was $59,900. In other words, around $60,000. Small potatoes, no doubt about that, but a lot of money made on that. Many well below rental rates for comparative quarter. Needlessly, despite the low FICA scores and income of borrowers, they squeeze every penny they can out of the borrower. And let's see, trying to get how many that Clayton foreclosed on. I was reading this earlier, and well, I don't have what they actually foreclosed on, but quite a few homes were, as they say, foreclosed on. So the profits out there of Clayton, $706 million it made. Cord made 55. That's the furniture situation there. We won't get into the rail cars. You can look at this later. And these are the companies that they have an interest in. American Express, percentage of company owned, 15.6%. AT&T, 0.8%. Charter Communication, that's a cable company, 6.6%. Coca-Cola, 9.3%. And DeVista Healthcare Partners, 8.8%. Deere and Company, they make tractors and whatever else, 7% there. Goldman Sachs, they own 2.7% of it. IBM, 8.4%, one of the largest holdings. Moody's Corporation, 12.6%. And an energy company, Phillips 66, at 10.5%. Not the smartest deal there. The energy companies are going down. Procter & Gamble, P&G, 1.9%. Sonanafa, I suppose, 1.7%. U.S. Bancorp, 5.8%. He's in a little bit of banking business. 2% of Walmart, and Wells Fargo, 9.8% of there. So those are the percentage of ownership, course, market, etc. You won't get too much into that. And Geico employs about 34,000 people to serve 14 million policyholders. They do have low costs, there's no doubt about that. The number 2 spot in auto insurance from Allstate. Geico also gained ground on State Farm. State Farm is very big in the business, and on August 30th, 2030, my 100th birthday, I plan to announce that Geico has taken the top spot. Well, interesting. Not sure where you'll be announcing that from, but very hard to say. Okay. Important risks. We, like all public companies, are required by the SEC to make risk factors out there. Let me mention just a few to begin with. An obvious threat, the Burlington Northern, along with other rails, is certain to lose significant coal volume over the next century at this point in the future, though in my view, for a long time, Geico premium volume may shrink because of driverless cars. Now, it's important. He's up on that. The development could hurt our auto dealerships as well. Circulation of our print newspapers will continue to fall. A certainty. We've allowed for when purchasing them. To date, renewables have helped our utility companies. They're in the renewable business. So he's not only into selling, as I think Lyndon Johnson used to say, sugar water, which is Coca-Cola. And let's see what it required in Iowa utility. acquired an Iowa utility, employed 3,700 people, now employs 3,500 people there. Won't get into all important risks. I won't spend any time on that. But the driverless cars, I'm very impressed by that. Now, the annual meeting, they will be streaming this, and I'll put a link up there on Saturday, April the 30th. It starts at 9 a.m. Central Time, and that can be at finance.yahoo.brk live stream. So he and Uncle Charlie will be on live. They have about 40,000 people. We've been there before. Very, very difficult to get a seat even with a press pass. On Saturday morning, they'll have a 5th International Newspaper tossing contest. 35 feet when he was a teenager. Well, anyway, he threw newspapers, and he owns, of course, the local newspaper, period. And let's see. Hawking various products from furniture to you name it there. Hamburgers. Somewhere here, and I missed it, he talked about presidential candidates that give negative messages out there, primarily that the American economy will be better in the future. That sort of kind of counters Donald Trump's Make America Great Again, which presupposes America has turned bad. Well, a lot of people out there that function in different manners, no doubt about it. There are some things we agree with Mr. Buffett on, other things we do not. That obviously because of demographics, people past 60 and people in their 80s will no longer be around in 20 years, we assume. Therefore, there will be some openings in the job market. And also, as he said here, driverless cars, etc., will take some jobs out of the market and what we'll call computerization, the rise of various programs that eliminate people, algorithms they're called, will make things different. The driverless car, driverless trucks will affect the economy. Reusable energy will make energy cheaper, and also how people get their energy will be different. Some will have the sun discs on their houses. A lot of that you see in Australia. Saudi Arabia is very big in solar, what's called now solar energy. It'll probably be personal energy. In California, very big, where you can buy the solar panels, and as more people buy them, they will be cheaper. We can expect Buffett to be in that racket too. He'll probably be in the driverless car market. He has, as they say, not missed a beat. Period. No one knows what day they will and will look like, I think. However, Einstein appraisal remains. I know not what weapon World War III will be fought, but World War IV will be fought with sticks and stones. I've always liked that by Einstein, and he would quote Pascal Wagner on the existence of God. That's where he gets into climate change. And let's see, we're back to the annual meeting here. When it opens, I'm not sure. I saw it before where he talked about the presidential campaign. We'll have to, I suppose, leave it at this. And nonetheless, this is on the 27th. Warren Buffett himself out there. Another large company. We employ 361,270 people worldwide in all of their companies. Berkshire Hathaway revenue increased by $16 billion in 2015. Not a shabby situation at all. And somewhere there's a photo of the people that are there. We would encourage Warren Buffett to make diversity more of a, as they say, cornerstone there. We'll now go to the BBC. We sort of rested here a little long, and we will do the numbers very quickly here. Usually when we get into Buffett's annual report, we spent a little time on it. Of course, we had a number of databases to address. We took a little bit more time here. The BBC, the election campaign, Buffett endorsed Hillary Clinton back in December. I wasn't the headline here in BBC, growth revised upward for the last estimate. We just went over the last estimate, amortized rate of 1% compared with, and the estimate was 0.7% there. Now, from Dr. Chris Williamson, he's chief economist at Market. We usually use their thing. Unfortunately, the cause for upward revision bodes ill for the first quarter. Most economists had taken a more pessimistic view, expecting the figure would be revised down. It was actually revised upward. The downside is that the next month's figures may be lower. Some have forecast the rate of growth for the first 3 quarters of 16 as high as 2.5%. GDP numbers were revised higher in part due to bigger than previously thought contribution from inventories, some of which often happen due to weaker than expected demand, meaning inventories that could act as a drag on Q1, the first quarter. Uncertainty, no doubt about that. Consumer spending accounts for 2/3 of the U.S. economy, rose at 2% pace in Q2, rather than the 2.2%. That was revised downwards. But some economists fear that the slowdown in consumer spending could get worse. Dr. Williamson says companies cite a number of worries that a drag is on consumer spending, causing business to become more risk averse. These include uncertainty about forthcoming election. Now, that is really not as much of a worry because of the general cookie pattern of the American economy. Market volatility, yes, a global economic environment. Economic environment plays much more on the American globalized economy and other economies than do policies of usually the Fed banks. The Fed Central Reserve has indicated rates that could rise gradually. Well, that in itself is pretty much factored in. Economists believe U.S. growth will be held back by slowing economies around the world, from China to Brazil. China much more, and Brazil. But Reuters survey estimated that the top 30 global oil companies have cut their budgets an average of 40%. It should have happened before. Let me just get a few things here. United Technology turned down the offer from Honeywell. Osborne, he's the Chancellor of the Exchequer in the UK, warned of further spending cuts. And let me get it real quickly here, because it does play in, told the BBC Global Economic Turmoil, and told the BBC, and slower growth means we'll need to undertake further reductions, he called it there, and don't exactly see what they are, but anyway, they will be reducing spending in the UK. Anything else? Your shares are boosted by improved GDP. Well, marginally so. We'll get to that in a minute. It was revised up to 1% from 0.7. That sometimes happens when things are down. Caterpillar was up 0.6. ExxonMobil was lower at 0.32, and Chevron fell 1.1%. 11% there. But you'd expect that to happen. It's something that has been going on for a very, very long time. China. We'll get to this and we'll go do the numbers. China seeks to assure the G20. Chinese Finance Minister Liu Jui said that the country could tackle the pressures it's currently facing. Separately, Bank of England, that's Mark Carney, used to be at the Bank of Canada, said he was concerned by moves by some central banks to use negative rates. We've talked a little about negative rates here, including finance ministers from the world, largest economies, based on a gross domestic product. The G20 covered 86% of the world economies, accounts for 2/3 of the world's population, 75% of global trade. China's economy, the second in the world, is growing at a slower rate, slowest rate in 25 years. And we'll maybe have a side program on this. Speaking in Shanghai, the bank, that Carney, said he was concerned by moves by some central banks to cut interest rates to below zero in order to boost growth. Bigger than thou neighborhood landscape. Carney also said a quarter of the of global output was coming from economies that real interest rates were initially through the floor. It's critical that stimulus measures are structured to boost domestic demand, and this is we talked about a little earlier there, and it's much more important than markets. Let me just sort of clarify that, and to what the central banks do. There are limits to the extent to which negative rates can achieve this. It's critical that stimulus rates are structured to boost domestic demand, particularly from sectors of the economy with healthy balance sheets. He said governments need to step up the pace of economic reforms. Global growth has disappointed because the innovations and ambitions of global monetary policy have not been matched by structural measures, according to Mr. Carney. Nonetheless, Tuesday confirmed that the UK economy grew by 2.2% last year. This was the slowest annualized rate since 2007. Not unusual there. Not sure if growth confirmed at 0.5%. The Office of National Statistics' second estimate of GDP for the quarter was unrevised. The estimate was unchanged at 2.2%, the slowest since 2012. On balanced economy, that the fourth quarter of 2015 was the 12th consecutive quarter of growth, compared with the erratic patterns of behavior between 2009 and 2012. Output in services grew at 0.7% in the 3 months ended to the end of December. Household spending slowed slightly in the quarter, but still 0.7% there. INF said the global economy has weakened further and warned it was highly vulnerable to adverse shock. So that's the end of that. Let's go to the markets now. Market day. Oops, hit the wrong button, quite literally. Not unusual in this particular time, but anyway, we'll get the markets here. These are Friday unless otherwise noted, and it's all rosy. The BBC Global 30 was at 37.97. The FTSE, all shares at 43.39 all on Friday. In Amsterdam, they were at 7.28. In Frankfurt at 181.82. That's the DAC. In Paris, they were at 66.12. In Brussels, at 32.53. In Madrid, at 133.60. In Zurich at 82.98. In Moscow on Friday at 12.84. In Johannesburg, they were down 294.82. In Bombay on Friday at 141.05. In Karachi, 491.55. They were down in Lahore at a negative 45.11. In Colombo, 130.34. And in Tehran on Wednesday, 136.20. In Sydney, 0.40. The Nikkei at 48.07, or not 7. The Hang Seng at 475.40. In Shanghai, they were 25.96. In New York, they were in the negative at 57.32. And the Nasdaq at 8.27. The Merc was also down at 3.65. In San Pablo, they were in the negative also at 294.82. In Mexico, they had 37.83 on Friday. So most of the numbers were in the positive range. So we, as they say, look, listen, and whatever else we do. Now, let's jump back here. Oh, here we go. Commodities, got to get to the right screen here, hopefully. And nonetheless, these commodity prices. Brent crude, down 8 cents at $35.21. The spot was at $36.12. It was up $2.32. We monitor this very carefully. West Texas crude was down 21 cents at $32.86. T-Boone Pickens jumping for joy. He remembers $15 a barrel oil. Nonetheless, gold. Dubai gold down, futures were down $12.40 at $1,222.80. The Forex, they were down $4.40 at $1,231. So much for gold. And Euronext Life futures. Coffee was down $39. Robusta coffee was down $3. That's cocoa. I guess I got that right. Was down $3. And white sugar, I don't know why we give that one, down $2. The Bloomberg Commodity Index was down 28 cents at $75.46. So this does it for us. For those in business next week, a productive one. And for the consumer, keep your eyes on the prize, which evidently, according to the latest figures, you have been doing in a most diligent manner. Good day.